So let's start by preparing our income statement, and this is April 2023. This is April 2023, question 4. April 2023, question 4. And we are going to start with the income statement. We start with the title, and the title is Buffer Limited. Statement of or income statement, we just call it income statement. Income statement for the year ended 30th September 2023. For the year ended 30th September 2023, not 2023 but 2022. Our level of precision is shillings in thousands. We start with the revenue. We are given the revenue as 780,000 from our trial balance, 780,000. Now we go ahead and get the cost of sales. We less cost of sales. Now cost of sales has a few workings, and let's do the workings. So this is working number 1. Let's do our first working. So I'll do my workings here alongside the question. So working number 1 is cost of sales. So I want you to follow along from the question, from the trial balance. Recall that from section 1 in financial accounting, cost of sales, we start with the opening stock. So we get the opening stock from our trial balance, and you can see from our trial balance, our opening stock is given as our opening stock is given as 109,200 from our trial balance. 109,200. We get the purchases, and in this case we don't have purchases. It seems that this is a manufacturing company, so we have production in place. So production we are given as 450,000. Lastly, we have closing stock. Closing stock, we are given as additional information number 1. Our closing stock is 132,000. 132,000. Now we can get the figure for cost of sales, giving us 109,200 plus 450,000 minus 132,000. This is giving us 427,200. That is our figure for closing cost of sales. But recall, we have depreciation on the leased plant, which is affecting cost of sales. From additional information number 2, we are told on 1st October 2021, the company leased some equipment to boost production. The lease was for 5 years, and the lease rental payments were 24 million, payable semi-annually in arrears. The fair value of the equipment was 186,000, and depreciation is to be charged on a straight line basis and allocated to cost of sales. The interest rate implicit in the lease is 5% per half year. So let's go ahead and calculate the depreciation on the leased plant depreciation. Let me just abbreviate it as that. On the leased plant, depreciation on the leased plant, we have it as given as we are supposed to provide for depreciation on a straight line basis of a period of 5 years. The lease is lasting for 5 years, so we take the cost minus the scrap value, divide it by the useful life, and in this case the useful life is the lease period. So we have 186,000 minus the scrap value divided by the useful life, which is 5 years. So 186,000 divided by 5. Let's get our calculator for that one. We have it as 37,200, so we include it here, 37,200. Fine. Now let's go back to additional information number 7. Depreciation is to be provided on a straight line basis and apportioned as follows. So we have cost of sales 80%, distribution cost 10%, admin expenses 10%. Now we need to calculate depreciation as a whole for all the assets we have and then apportion them as indicated on additional information number 7. So let's go ahead and do that. So I can have my working number 2 depreciation. Working number 2, I can leave some space here and have working number 2 depreciation. I can have my working number 2 as depreciation. We start with the buildings. From additional information number 6, we can see that the buildings cost 108,000 and the useful life is 50 years. So the cost minus the scrap value divided by the useful life, we have 108,000 minus the scrap value divided by the useful life, which is 50 years. So this one is giving us, let's get our calculator for that one, 2160. This is on buildings. Now let's now go to plant. Let's go to plant. Remember, land does not depreciate. Plant. So plant, several items are affecting plant, and the first one is additional information. Let me check. 3. The suspense account represents sales proceeds from some item of plant which had a cost of 36 million and which was disposed during the year. The accumulated depreciation for the disposed item as at 30th September 2021 was 27 million. Any gain or loss was to be adjusted in the depreciation expense account. So any gain or loss, we will have to adjust it in the depreciation expense account. So the first thing we are going to do for that case is to get whether we had any gain or any loss. So let's do that. We go ahead and have working number 3 here, suspense account. We have our suspense account. So the disposal proceeds, we are told that, let's check. The suspense account represents the sales proceeds. Okay, let's check from the trial balance. The suspense account is 7.2 million. So 7.2 million, that is giving us 7,200. Fine. What was the cost of the asset? So the cost of the asset that was disposed was was it 27,000? Let's confirm that. The cost was 36 million. The cost. So we need to get the net book value so that we can assess whether there was a gain or a loss. So the cost was 36 million and the accumulated depreciation was 27 million. So let's compute that. 36 minus 27. That is giving us 9,000. So 9,000 we less from the disposal proceeds. This is giving us a loss of 1,800. Fine. Now this 1,800 we are going to adjust it or to include it in the depreciation account for the plant. So let's go ahead and calculate that. So the depreciation for the plant, we have the plant has a cost of 162,000. The plant has a cost of 162,000 from additional information number 6. But we disposed a plant which had a cost of 36,000. We disposed a plant which had a cost of 36,000. Now we go ahead and divide by the useful life. We divide that by the useful life, which is 4 years. This will give us 162,000 minus 36,000 divided by 4. This is giving us 31,000. This is giving us 31,500. So we need to include this 31,500. We need to include 1,800. And this will give us 33,300. This will give us 33,300. We have just included this figure here. Now we get the total depreciation. We add 2160 plus 33,300. This is giving us 35,460. 35,460. Now 35,460 is the total depreciation. Now since we have the total depreciation, we can go ahead and include it in the cost of sales, but in the proportion that we are instructed to use on additional information number 7. So cost of sales is supposed to take 80%. So 80% of Depreciation, let's go ahead and include it here from now, additional working number 1. So depreciation, we have 80% of 35,400 of 35,400 times 35,400. So let's multiply that. 80% times 35,400. That is giving us 28,368. 28,368. Now we can get our total figure for cost of sales. We start with 427,200 plus 37,200 plus 28,368. That is giving us 492,768. 492,768. That is our figure for cost of sales. 492,768. We less that and get the gross profit. In this case, the gross profit will be $780,000 minus 492,768. This is giving us 287,232. Fine. Let's now go ahead and work out the expenses. Our expenses are classified into 3. We have administrative expenses, we have distribution expenses, and we also have finance cost. So let's go ahead and start with administrative expenses. So as per the trial balance, we are given administrative expenses as 156,000. So let's go ahead and do working number. So we are at working number 4. Working number 4, administrative expenses. Now, the administrative expenses as per the trial balance, we are given as 156,000. We also recall that we had a legal claim somewhere from additional information number 5. So we are told a legal claim of 60 million was lodged against the company during the year. So this was a legal claim of 60 million, but we are not going to include the 60 million just yet because we are not told that this amount will be paid. So we are told that the directors estimate that there was a 40% possibility of the claim being successful, and they made a provision of 24 million. So the provision now is what we are going to include in the administrative expenses higher. So we have legal claim, the provision of 24 million. Next, we have the depreciation, which is 10% of 35,460, which is 3546. So depreciation, which is 10% of 35, we had calculated it here, 35,460, which is 35,460, which is 3546. Fine. So we go ahead and get the total administrative expenses, which is 156,000. The legal claim of 24,000, and also so let's get the total. But recall, this legal claim was included, so we need to less it. If you read the additional information number 5, the directors estimated that there was a 40% possibility of a claim being successful, and they had made a provision of 24 million. So we need to reduce this 24 million because they had already made the provision. So 156 minus 24 minus 3546. This is giving us 135 546. 135 546. $135,456. So let's include that on our income statement. 135 546. 135 456. Next, we work out distribution costs. So distribution costs, I did not see any information affecting distribution costs other than depreciation. So we go ahead and take 42,000 as per the trial balance, and then we less the depreciation, which is 3546. This is 42,000 plus. It should be plus, not minus. It should be plus. Plus 3546. This is giving us 45,546. 45,546. And that's it. Next, we have finance cost. Now for finance cost, recall we have a lease. We need to do some workings for the lease so that we can get the whole figure for finance cost. Now let's go ahead and work out the last figure for the last item on our income statement, which is on the finance cost. Now the finance cost in this case, recall that we have a list item of plant, and we need to calculate, we need to get the amortization schedule so that we get the interest that was paid on the lease. So let's do that. So we have working number 5, lease amortization. We have the lease amortization. So we have the period here. We create an amortization schedule. Have the period. We have the balance brought down. We have the interest, which is at 5% semi-annually. We also have the payments and the principal, and the balance carried down. So we have year one. Year one has 2 periods, but we are starting with 186,000. The payment is 24,000. We are paying 24,000 as the lease rentals. Now we get 186,000 times 5%. That is giving us 9,300. So 24,000 minus 9,300, that is giving us a principal amount of 14,700. Now 14,700 we less from 186. We less from 186,000, we get 171,300. That is a year one, period 1. We go to period 2. We are still in year 1. So the second period, we have a balance of 171,300. We get 5% of that. We get 5% of that is giving us 85,65. The payment is still 24,000. The principal is 24,000 minus 85,65, is giving us 15,435. 15,435 minus 171,300 is giving us 155,865. 155,865. Next we have year 2. Year 2 we have period 1. We start with 155,865. 5% of that one is giving us 7793.25. The payment is still 24,000. 24,000 minus 7793.25 is giving us 16,206.75. 16,206.75. Now we get the balancing figure of 139,658. 139,658.25. Lastly, we go to period 2. We start with 139,658.25. So 5% of that is giving us 6983. 6983. The payment is still 24,000. The principal will be 24,000 minus 6983, which is giving us 17,017. 17,017 minus the balance, giving us 122,641. You can get 122,641. 122,641. Now the interest expense for the year will be for period 1 and for period 2. These two. So we'll have 9,300 plus 8,565. So interest expense we'll have from the lease 8565 plus 9,300, giving us 17,865. 17,865. And also from our trial balance we are told that the interest paid on loan stock was 18,000. The interest paid on loan stock was 18,000. Recall we had a loan stock, so the interest is 18,000. So interest on loan stock, we have 18,000. So we add the two, 17,865 plus 18,000. This is giving us 35,865. 35,865. And that's it. That will be our finance cost. Our finance cost will be 35,865. Working number 7. So let's go ahead and work out the tax expense. Let's go ahead and work out the tax expense. So the information is given on additional information number 4, where we are told the income tax amount is 1.2 million, which is included in the trial balance, and was the estimated tax as the 30th September 2021, and the current year's tax estimated at 9 million. In addition, the deferred tax liability of 36 million was provided for. The deferred tax was provided for as 36 million. We are also told that as at 30th September 2022, the temporary differences were 168 million. So we need to get the differences, the difference in deferred tax. So in this case, we have the change in deferred tax. We have 30% of 168 million. This is giving us 50,400,000. And also recall that we are also given that the deferred tax for the year is 36,000. So there is a change. There is a change of that 50,400 minus 36,000. This is giving us 14,400. 14,400. We also need to include the current tax of 9,000. Current tax of 9,000. So 14,400 plus 9,000. This is giving us 23,400. 400. So let's go ahead and indicate that tax for the year is 23,400. 23,400. So we less 23,400 from the profit before tax. We get the profit after tax as 46,875. This is the profit after tax.